Hello, I'm Bryce Norris, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Wednesday, July 3rd, 2013. Markets are closed for Independence Day, but before firing up the grill, market analyst Paul Bergner and I will go over the outlook for prices at this annual benchmark. Some year weather has the markets in a tizzy, but that's not the case in 2013. Futures made new lows before the holiday, despite tight old crop supplies struggling under the weight of bearish new crop fundamentals. The numbers looked especially bleak for corn headed into the July 11th monthly supply and demand report from USDA. Big adjustments to September 1st carryout aren't likely, but USDA may keep a negative outlook for the year ahead. In addition to bigger than expected acreage, crop ratings showed potential for good yields, with my model currently around 159 bushels per acre nationwide. That would boost production to more than 14 billion bushels, providing plenty of cushion even if acreage turns out less than forecast. Demand should improve, but not enough to keep ending stocks from more than doubling. Ethanol production last week was around 22,000 barrels a day due to declining margins, and export sales faced plenty of competition from the Black Sea and South America, which captured new deals this week from regular U.S. customers in Asia. With carryout potentially 1.8 billion bushels or more, harvest lows could sink to $4.55 a bushel. Weather forecasts into mid-July remain cool and wet. Is there any reason to expect a rally, Paul?
Not that I can see at this point. I think that that cool, wet weather into mid-July really kind of keeps this in a sideways pattern. I think the tight supplies will hold it from really falling off the board, but it does look like we don't really see a rally there. I think the next real opportunity is going to be in late July when we start into pollination, and if we have some hot, dry weather at that point. One of the things to remember is that we planted 43% of this crop in a week. It's going to condense that pollination time. If we have tough weather, hot, dry, during that time period, I think then we might actually get to see a rally.
The big story in the soybean market remains old crop July, which went into delivery like a Roman candle. After failing to hold its first move back to 16 bucks, the notoriously volatile contract reflected a cash market that was up and down as well. But delivery fireworks aside, new crop prices seemed like a dud. November futures did find some support after losing 61.8% of its recent rally, but good acreage and crop conditions appear to increase potential for a 3.4 billion bushel crop and a big increase in carryout. My yield model puts the U.S. average yield at 45 bushels per acre or better currently. A big increase in demand might chew through a lot of those beans, but our biggest customer, China, is suffering a slowdown in growth that could hold down increasing protein consumption at least a little. As a result, USDA is likely to stick to its estimate of big new crop carryout. Tighter old crop ending stocks seems logical, but the agency has been reluctant to reduce its forecast much. Paul, is the old crop story enough to keep the new crop soybeans from further declines in July?
Well, I think that tight old crop supply has really held this market together so far, and I think that's likely to continue. One of the things we have going on in China, the growth is slowing, but there's starting to be some discussion about maybe backing off production estimates in China on their soybeans. Maybe that offsets one another. We'll have to see how that goes as we go on through the year. Again, I think we trade mostly sideways until USDA gets done with that second survey on soybean acres that they promised us last week. We'll see where that goes. That's also going to come right along with August weather, which typically is an issue with soybeans as well. So I think the next opportunity for positive news from the soybean market, other than what happens with the old crop, is going to come in August.
Wheat prices came under pressure at all three exchanges and tried to turn higher into the holiday. Cheap prices started to attract buyers, with the U.S. selling 13.2 million bushels of soft red winter wheat to China and even some feed wheat to Japan. Trouble is, while U.S. wheat is cheap, wheat from France and the Black Sea is cheaper. Romania and Ukraine won the first tender of the season from Egypt, which may have trouble financing deals due to all the political turmoil there. Other parts of the market are just as chaotic due to the lingering effects of the discovery of a field of GMO wheat in Oregon. Though no other samples have turned up, China bought 11 million bushels of Australian wheat instead of grain off the PNW, while Japan excluded white winter wheat in its latest tender. USDA puts out its first projections for supply and demand of the various classes of wheat for 2013 in its July 11th report. Hard red winter wheat stocks look tight, but more soft wheat could be left over a year from now. Paul, winter wheat harvest is probably half over. Is the worst of the harvest break in prices also history?
You know, I kind of think so. I think we've harvested the best of the hard red winter wheat as we come up through Kansas, and now we're going to move into Colorado, Nebraska, South Dakota, where the drought really has not released its grip yet. So the best wheat's harvested. I think we may have seen the worst of the prices here as we move forward. We typically move up after Kansas harvest is finished, and I don't see anything to change that here. And we're above I-70 really in Kansas with the biggest part of the harvest. Chicago wheat's the wild card. The big yields there make some difference in that soft red wheat market, and we'll see where that one goes because we're hearing exceptional yields coming out of the Midwest.
Well, thanks, Bob. We'll be back July 11th with a complete rundown on the USDA report on the next edition of The Buzz.
We'll have to have more margin now, there isn't any doubt. So you better dash with a load of cash or we'll have to sell you out.